All right. So, welcome everyone to this session. We had a recording last time regarding the trends and trend lines, but unfortunately, the video, the mouse was going somewhere else, and the sketch was going somewhere else. Even though it was only noticed after it was uploaded on YouTube. So, I hope my voice is clear, right? Okay, so based on the very many queries that I've received, there are few very good queries, and they have good learning in that. I would first start with the brief summary of what was discussed in the last session, right? Because there was some misalignment of the mouse, so certain parts of the document were not clear, right? So what I had shared in the last video, which was posted on the YouTube, my first premise was that we are taking the trend lines in a wrong way, right? If this is a trend line, so I hope my mouse this time is clear and the drawing is also in sync. So if I tell you that this is a trend line, so normally a trend line definition is 3 or more points touching any line, it becomes a trend line and it is a valid trend line. But what if this price here breaks at this point? So normally you would say that the trend is broken and it is placed to go short, and then the short setup becomes something like small pullback and then go down, right? But here's the problem with this. What can happen is the price can go in a sideways movement for some time and then break out, right? So a logical definition then that this becomes is that the trend has only shifted. So this is a new trend line. But then this information you cannot use in your trading, because once you have taken a short trade, then you realize the market participants are against you. So a better way of understanding trend, and this was shared in the last video, it is a higher high and a higher low, right? So this is a higher low as compared to the previous low, higher high, higher low, higher high, right? So this is a valid trend. Now the trend will not be broken unless this previous low is taken out, right? Something like this. Okay, but again, one catch here: if this previous low is broken out, we still need one lower high to confirm that a new downward trend has started. Till that time, if this lower low is not this higher low is broken but the lower high is not made, we are in a suspended uptrend, right? Same goes for a higher high but a small fake out, right? Okay, now this was a higher high, this is a fake out, right? But still it is a small high, right? Now what happens is we are doing this, right? This becomes a lower high as compared to this. So we are saying, see, since the low is broken, okay, just a minute. Since the low is broken, we are in a downtrend. But that is not the case. Since this was not a significant high, the lower high, the higher high, the higher low becomes this one. So till that time this low is broken, we are still in an uptrend. So this is a suspended uptrend and it can resume anytime. So this is a very important takeaway from the last video, right? You guys, you want to add on to anything, just unmute yourself and you can please. This was a major thing which was discussed in the last video, right? And based on this, there was one specific query which I received. I will discuss after this. So so now we have discussed this. At this point we have not made a significant new high, right? So the valid higher low is still this one. So for the trend to be over, we need to break at least this low. Then we can say, okay, the trend is suspended, and then we wait for a lower high, and then we can consider as a new trend. So actually there is one basic idea. A trend, an uptrend never goes, that it was an uptrend and suddenly it becomes a downtrend, right? It's never like that. There's always a transition period. So it goes like an uptrend, then it goes sideways, and then downtrend. And this is what is called the phases of the market. This is a markup, this is a markdown, this is a distribution, and then you have a accumulation at the bottom. So this is a Wyckoff concept about the phases of the market. So this was the major item discussed. Another thing is about the slope of the trends, right? So if I'm saying that this is a trend, right? It remains a trend. Okay, okay, so this remains an uptrend till a time the slope is above 0. But then this uptrend, and obviously the structure of the market needs to be okay. So the slope of the market, can be above 0 is still an uptrend, provided this structure is maintained. But the only thing is this mild slope, it is a very weak uptrend, right? It is a very weak uptrend. Similarly, if it is too steep, the slope is too steep. So this is a very strong uptrend, but not a healthy one, because it is very difficult to sustain, right? A healthy uptrend as okay. The healthy uptrend is always a 45-degree angle, right? So what we say is this I actually planned in for the next session. This is your demand, and this is your supply. So this is a healthy, because you need to have some supply, like in these points, to have a meaningful demand levels. So this is a discount to the price level, right? And there is a very if you have if you've been exposed to the auctioning theory of the market, auctioning. So in the auctioning theory, it says when the prices move higher, and I want you to understand this concept. When the prices start moving higher, there will be a point when you'll find a lot of sellers, right? You can take it as your property markets. And today I have a house, right? Let's suppose I have 10 houses, let's suppose, and each is 1 crore rupees, right? I'm sitting on them. Let's suppose the prices of the housing market starts increasing. So there'll be a time when somebody would be offering me 2 crores for each house, right? What will happen is I will be interested to sell. Maybe one house, I will say, okay, out of 10, I'm selling 1. Now, if the prices go to 5, what will you say? Okay, out of remaining 9, I'm ready to sell 3. What if the prices now go to 10 crores, right? I will say, oh, 10 crores is too much. My price was 1 crore. And I think the optimum price ought to be somewhere around 3, not more than that, as per the current market condition or something. So what I'll say, okay, I had 6 remaining. Out of these, I'll sell all. So you see what is happening. Higher prices are attracting the sellers. Higher prices are attracting the sellers, right? So this is what is it? It is a supply zone. Higher prices are attracting the sellers. And same way, when we go down, the prices are going down and down and down. There will be a time when the underlying people, because there are many people who are tracking the fundamentals also, the big monies, they would say, no, this is not the intrinsic value of this is a lot higher. So I'm getting this particular entity for a discount, you know. So what will they do is they'll jump in, they'll get into and get buy. And this is the basic concept of auctioning, right? Okay. So this is what the concept is, and I'll try to cover more in the next video for the supply and demand, if if it is required, because honestly the feedback has not been very good. Only few people are interested, so one-on-one I can discuss with them based on this market trends video which I had shared. There was one query, and that was a very interesting query which was shared to me by Mr. Hemant, right? So I wanted to reply to him at that very point, but then I thought that it is good for everybody, right? So he has sent me a query that yesterday. So I'll open this query is related to BankNIfty, right? So his query is on the 5-minute chart somewhere here. Right? I'll mark the level. So he says yesterday at 2:05, our OI data. So that he's referring to the OI tracker channel. I'll open that also, and shows CE is higher than PE. Okay, so let me just take out that chart also, so we understand what he is exactly talking about. And I get his point is a fair point when he's referring to. Okay, so this I've taken. Just a minute, please. I'm sorry. Yes. So he's referring to this data. I hope this data is visible. Right. So he says somewhere around 215. Somewhere around 215. 215 would be. I'll draw a line. 215, 40, somewhere here, right? Somewhere here. So he says somewhere around 215, 25, 215. Our OI data showed CE higher than P. Yes, that is correct, right? So we can see here. In such a case, how we can identify the current trend? Even if this was higher, which is a bearish sign, the markets drove up in the up direction. Certainly, he had a trade of 36,800 put, bought and carry forward in a good profit based on this OI tracker. But it got reversed from S1. It's some S1 support he has marked. But then OI tracker was still showing the bearish signal. So I got a little confused, and he would like to know how to proceed for all the future trades, right? So we understand the query that the OI tracker, the outstanding OI positions were showing bearish sign, but still there was a uptrend in the markets. So I would like to, Mr. Hemant, just point out one thing, and I had shared this in the last video also, that markets are fractal in nature. So if you are trading let's suppose a daily chart, this is an uptrend in a daily. If you come down to an hourly chart, there will be times when there is a downtrend, and it is perfectly normal, right? This is a healthy market where you have pullbacks. So somebody who is bearish on a hourly chart needs to be aware of the major trend on the daily, right? This concept should be clear, and we should be clear about it, right? So even if this is a big money, right? These many positions is big money. They are perfectly aware where their levels are. So just because, I told you during OI tracker video also, that this is just a data point, and this is a confirmation. This is not your trading setup. The trading setup is always the price action, right? So with this in mind, let me just then I tried to study what you had told me, and let me just show on the chart where you were when you were talking about this, right? So here, this is 2:05, somewhere here, right? This is a 2 o'clock 5-minute candle, and this is 2:05 5-minute candle, right? Right. So just see, first, if you're on a 5-minute chart, you need to understand what is the trend on a hourly chart. So we always start with the higher time frame, and then we this is how I trade the higher time frame, my trading time frame, and my entry time frame. So if I'm trading the hourly, which is a very good time frame for trading intraday, hourly, if you're trading the hourly, your entries have to be on a 5-minute chart, and then your major trend has to be on the daily, right? You should not be going against the daily. So considering that, if you come to the hourly chart, where we are, this is the pink line where we had drawn. And just now, and I took this query because it suits perfectly well with what I was telling you about the trends. So if you just take this snapshot and bring it back to the paint and see where we are, right? So here I take, see, higher high, higher low. Agreed? Higher high, but not a very significant higher high, right? So I hope this is clear, visible. Huh? So otherwise I'll zoom it a bit more. Yeah. So this is now not very significant high. And then we come back. So you see, on an hourly chart, we are still in an uptrend, right? Never mind, it is a very weak uptrend, or the uptrend is not very strong, whatever way you say, but it is still an uptrend. And I bet you that if we come here and I draw the fibs on this thing, see where we are. We just had a false breakdown of the 618 level. This is a very significant level, and you can be very much sure that it will invite a lot of new buyers or existing position holders to add on to their positions. This is a golden zone, right? Okay, this is our hourly. Now come to the 5-minute, the frame you were trading. So here we see a false breakdown of a level which was established on a increased volume. Can you see the increased volume? The reaction of that was higher prices. So it is actually action reaction. The market is always action reaction. What was the action? High volume. What was the result of it? A higher prices. Now when you go down, it is the buyers which are in control. So here there was a lot of buying. So you should understand, how the market structure is also playing out. There was a lot of buying on a 5-minute chart. This does not mean your overall trend will change. No, right? But now since there was buying, we start moving up, right? Where do we go? To the previous high, right? And just the moment we enter this zone, which was a supply zone, there was a volume pickup and a bearish reaction. So, and this volume is more than this volume. So you can say somebody who has bought here, exited here. So are we bearish or bullish? On an hourly chart, we may be bullish, right? But then there was a false breakout. False breakouts are signs that, the buyers are not that much in control, right? Hourly is mixed. We come down a 5-minute. We had this. Most likely, my opinion is, and this is not a trading advice, my opinion is this is going sideways. Now, if the bulls have to be again in control, they have to break this level. And since there's a lot of volume here, a lot of volume as compared to last few candles, the most likely play comes out to be a gap up above this level, or opening 5-minute candle breaking through this level with a high volume. Otherwise, it is all, at least it will go and test this level. It is definitely test this level. And then based on the demand, if it is still, there's a lot of demand, we can say that, the uptrend is going to resume. This is how I understand the charts. And once I've seen this, then what I can do is, as I told you, there was a lot of selling here. What we can do is we can check this strike price for the call and option, call and put positions, right? So this is how this query I had specifically taken, because it relates your OI tracker with your price action chart, and you can never ignore the price action chart. If you ask me personally what trade I would prefer, this you sell straddles, right? Straddles and strangles based on this levels that we have marked. So that was it, and a quick recap of the trends and trend lines session. Is there anything that you guys would want to know? I hope this was some benefit. Come on, guys, something. Or is there any other way that you would you say that no, this is not the way I would analyze, and there is an alternative way that you would suggest? You are free to share. I may also be wrong.
Sir, can I ask you?
Yeah. You're audible.
Hello.
Hello.
Actually, what I marked on the Nifty was moving up, but the data was building very in a at 280. I think what I remember 17,280 to 250.
Right.
To 300 more negative, and but the price is increasing like anything.
So price. So we have to understand the price is increasing. Is it a healthy pullback or not? Like here, if you see in the BankNIfty 5-minute chart, it is still a downtrend, right? And this can what can happen is if I take an arrow, this can go straight down again. The downtrend is not over. The any trend, and I would like to add here. I thought I'll share in some other video. Any trend ends in 3 ways, right? Any trend ends in 3 ways. One way is the climactic volume. You have sorry. No, is the voice breaking just for me or everybody?
Sometimes it's breaking, not every day.
Okay. I'm sorry about that. I will find a better way, So one way is your extreme volume, climactic volume, right? The other way is you have a divergence of the momentum and the break of the lows. And the other one is you have a range and a break. So this is most reliable, then this one, and then this one. So you can. So there are 3 ways in which any trend ends. Another added point I would like to make here. Since the markets are fractal in nature, I told you that daily, hourly, or 5-minute. Any trend which ends on a 5-minute will bring the prices to pivots of hourly. And by pivots, I don't mean your formulas, C plus low plus H by 3. No, not those formulas. Pivots would mean 50 EMA, right? Your support zones, or your 50 fibs, or your support resistance levels. So any trend which ends on 5 minutes will pull back to hourly charts pivot. Any trend which ends on hourly will pull back to pivots of the daily chart. So this is one of the way you can. So here, if you see this, for the time being, this suspended. There's a false breakdown. There's a lot of volume here. It can go maximum from up to what point it can retrace? Maybe this level, 618. And from there, you can look for more shorting opportunities because your hourly has a false breakout. So hourly has been dicey, and on the 5 minutes, you're looking for an entry. But if this was a significant high, then you can be sure, the uptrend is still valid. And also in the last video, I told you one thing. A strong trends, generally keep hugging your 14, 15 EMAs. And this is what I mean by that. Since there was a break now, it is breaking, the EMA is bending, the trend is not very strong. And this would most likely be some resistance zone of the daily, right? So what we are approaching some resistance zone of the daily. If you ask me to draw zones here, I will take this, and obviously on the top. So we are in that zone, and since we are approaching that zone, we'll have some sideways consolidation, some reaction. And if I want to take out such a resistance, what is the best way is either gap up or a high volume up move, because you have to absorb all that supply. So the best way of absorbing all that supply is a high volume move. Or if you want to ignore it, there are gap ups. Gap ups are created just to convince the sellers that they'll be going to get good prices, so that they do not rush to the market with their selling orders. Right. So again, like you said, sir, the prices are moving up, but the OI tracker is showing you a negative. See, the OI tracker positions are built over many days, right? Calls and puts. So they will take some time to readjust. So also there is a very classic move associated with it. If I have been caught on a wrong side, there'll always be a case where you'll see that prices are retracing to give the big money a place to exit, and then they will reduce these positions. And this is what the break test continuation pattern is. The reaction, there is a break, there is a test. At these tests, the big money is closing their positions. So the readjustment will keep on going on, but you cannot ignore your price action chart. This is what my point is. Is it clear, sir? I may be wrong, but this is how I approach. It is very important to understand the price action, not your trend lines or something, but price action. What is happening? And for this, I had shared one. I'll again share that. You read it. This particular 1 minute. I'll show you what I'm talking about. There was a write-up which I had shared. I will quickly just share with you guys again, so that we have some more meaningful discussions. It seems to be not responding. Okay. Actually, I'm not getting that write-up. I'll share after this meeting. The write-up only says, if there is a move here and there's a lot of volume, right? This has now established as a support. When we go up and at this resistance, we need to see what is the strength of the sellers. If let's suppose the prices turn back from here, at this point, it is not the buyer's strength, it is the seller's strength if they're able to defend this area or not, right? If a big money with deep pockets is short from this level, right, because it was established as a resistance, they have to defend their positions. And if they're not able to defend, let's suppose the prices just cross this level and go up, what does it tell you about the sellers? That they do not have the same strength. And by sellers, it is like not just one, it is different unrelated people who are trading looking at the levels. So if there is a volume spike here, it gives confidence to many other people and they will just join in shorting this thing, right? But if it crosses here, it shows you sellers are not ready to defend their territory. So this is what the volume, and it is all action reaction. The high volume, what is the reaction? Price is moving up. Low volume reaction, the prices have crossed. Now it becomes a new trend, right? The same happened here in the Nifty chart, BankNIfty chart. If you see 5-minute chart, so the prices were moving up Now the same concept, there's a high volume. Now we are moving up. Now at this level, the sellers have to show their strength. Have they shown? Yes, because there was a bearish reaction. This means that it tells you one thing, that the buyers here, they know that the prices are not ready to go up just yet, right? And another thing is, since there was so much selling, they can still get a good discount price somewhere here. So they will wait. They will wait with their buying activity before they try to take it up. And this is the concept. It is not valid here because your hourly is right now in a mess. This is a bending of the trend. This is in the end, this trend is weakening, right? That is why your 14 EMA is closed. Most likely what will happen is it will test the support of the 50 EMA. Or what you can do is you can check the fibs also, where your fibs are, right? So is there anything else, or like we can close this session? It was only meant for your trends and trend lines. Okay, there was one query of how to use the OI, how to read the OI data, right? This was again shared in the last YouTube video. I will quickly cover the parts of this OI tracker so that so here. So I hope this is visible. Sir, the OI tracker in the top, this is the positional OI calls and puts. Right? This is positional. So this was overnight puts and calls plus your change in puts and calls. So this is your change in OI for the calls and change in OI for the puts. So this chart starts from 0. So axis is here, right? For total call, total puts is the axis is here, right? So we consider this as intraday, and this is positional. And the difference, more puts means the big money is adding on to puts. That means they are supporting the prices and it is going to go up. Here we have negative. That means more calls are being written. More calls are being written, and the overnight positions also, this is against each other, right? This is positive and this is negative. So this means more calls are being written. That means they are expecting the prices to halt, right? But your overall trend, long-term trend is positive. So one thing is you look for a confluence between the two. One trading strategy can be confluence between the two. When this, if starts going positive again, then you can be sure, you know, the original trend has resumed. So all these things you can you know, visualize from this chart. At the bottom you have PCR, put call ratios of all strikes, and then you have max pain. Max pain level is, you know, a magnet which attracts the prices. This is the level at which the sellers will have maximum profit. So if the prices are moving up, you will see a stepwise move of the max pain. That is, the neutral level is also rising, right? And then we have shown the underline. So you will see most of the times underline will be hugging this or taking support, and then if moving up, it will take your max pain with it, right? So this is how you read this chart, right? So if there is any more queries, sir, please tell me. I hope this was a useful session. Please share your comments. Maybe I'll also add on to my knowledge based on your feedback. Right, so we are ending it now. Thank you so much. Thank you, guys.